The title of the video is Audit Intangible Assets Chapter 3, On the Job Training Task Analysis, Task Number 2. Main task. Ensure that intangible assets 1. Exist and are owned by the entity, and 2. That the asset register or listing is complete. Task elements. 1. Verify the asset register. Obtain the asset register and verify that each category of intangible assets includes cost, additions, disposals, write-offs, transfers, amortization, impairment, and any other adjustments for the current year. Compare these to the intangible assets movement schedule, ensuring any discrepancies are addressed. Existence and ownership. 2. Confirm the ownership or existence of acquired intangible assets. Select samples from the register for acquired intangible assets and verify ownership or existence by reviewing agreements, legal opinions, and other documentation to ensure these assets exist and belong to the entity. For internally developed intangible assets, validate ownership or existence by reviewing evidence of expenditures, such as contracts, expenditure reports with invoices and proof of payments, and approved expenditures. If verification cannot be achieved directly, consider alternative procedures to confirm that these assets exist and are owned by the entity. Additionally, confirm that the assets are free from restrictions, liens, or other forms of security interests. If any restrictions exist, ensure they are disclosed in the financial statements. For assets still under development, confirm that they have not yet been made available for use. Completeness. Ensure completeness through testing. Perform one or more of the following steps to confirm completeness and compare against the asset register. Review expenses recorded in accounts, like repairs and maintenance, to identify any items that should be capitalized as intangible assets instead of being expensed in the profit or loss account. Examine board meeting minutes to identify the acquisition or development of intangible assets. Analyze contracts entered into by the entity to check for the acquisition of intangible assets. Search for unrecorded liabilities and refer to on-the-job training guide audit trade and other payables. Discuss with relevant personnel outside the accounting department to identify unrecorded intangible assets. Circularisation. Conduct circularisation of intangible assets. Determine sample size and select assets for confirmation, documenting these in an intangible asset confirmation control summary. Communicate with the client regarding which intangible assets require circularisation. Dispatch confirmation requests and include a prepaid return envelope for ease of reply. Ensure all reply letters are accurately referenced for each response received. Record the reply in the confirmation control summary. Match details with the client's records and investigate any discrepancies, ensuring unresolved issues are revisited with the client. Consider if any discrepancies might indicate potential fraud or misstatement. Validate the authenticity of replies received electronically. Send follow-up requests for any confirmations not received in a reasonable time frame. Examine the intangible asset register. Ensure that the assets listed are appropriate under the scope of FRS 38. Key points. Auditor's review of prior year balances. Confirm that prior year balances are consistent with the audited financial statements. Check whether any reconciling items, such as newly acquired assets not included in the register, have been accurately amortized. Existence and ownership. Verification of intangible assets. Some intangible assets are easier to verify than others. For example, websites can be verified by visiting them. Customer and supplier relationships can be verified through a review of sales and purchases. Licenses can be verified by checking the license agreement and its validity period. For intangible assets, such as customer and supplier contracts, consider using confirmations to establish existence and ownership. If assets can't be verified, ensure they are properly recorded as disposals if applicable. Update the intangible asset register accordingly. Existence and ownership must be confirmed as of the end of the financial year. If an asset is held in trust by another party, like a trademark, review the trust deed or letter and obtain confirmation from the holder. Completeness. Risks related to completeness. Although the risk of incompleteness is generally lower than for existence and ownership, auditors must be vigilant in identifying possible understatements. For instance, management might expense all costs related to a project's development phase instead of capitalizing costs that meet recognition criteria. Circularisation. Challenges with circularisation. Not all intangible assets are suitable for circularisation, such as brands and websites. For those more appropriate for this process, refer to your firm's sampling template to calculate the number of samples required. If the client resists circularisation, discuss the matter with the team leader. Ensure all requests are authorised with the company's stamp or signature and bear accurate counterpart information. Requests in foreign currency should indicate the original amount. Confirmation requests must be controlled by the auditor. Confirm replies directly from the relevant counterparties, documenting all follow-up procedures in detail. In the absence of a direct reply, alternative procedures should be based on external documentation. Internally prepared evidence is less persuasive. Review of Intangible Asset Register. Scope exclusions. Under FRS 38. The following are specifically excluded from FRS 38. Intangible assets held for sale in regular business operations, deferred tax assets, leases of intangible assets following FRS 116, employee benefit-related assets, financial assets as defined by FRS 32, goodwill from business combinations, deferred acquisition costs, or intangible assets related to insurance contracts within FRS 104, non-current intangible assets classified as held for sale under FRS 105, assets from contracts with customers under FRS 115, assets related to exploration and evaluation, and expenditure on mineral, oil, gas, and similar non-regenerative resources. Task standards. Intangible asset balances must reconcile with the asset register. All movements within the asset register should match those in the general ledger, with relevant financial details such as amortization, impairment losses, and disposals reconciled. Verification procedures must establish the existence and completeness of current year additions and assets at the beginning of the year. Documentation supporting ownership of each asset should be obtained and maintained. Are you confident your intangible assets are fully accounted for? Whether it's patents, software, or customer contracts, missing assets or incomplete listings can seriously impact your financial audit. If you're looking to sharpen your audit skills or improve your team's approach to intangible assets, download my detailed OJT guide. It's designed to guide you step by step through the audit process, ensuring nothing slips through the cracks. Head to the link https:/payhip.com/RJVMA and get instant access. What you see in the video is exactly what you'll receive in the PDF digital product.